Welcome to thestockminer.com here in the very beautiful Black Hills of South Dakota today. 70 degrees today. I am Brian Johnson, feeling nice and warm. Sat out on the deck for a while today when things got slow and got myself a little bit of sun, getting ready for summertime. Hitting that time of year where I start to get a little cabin fever as the weather gets nicer. So we are not out of the woods yet, though. For those of you that know anything about South Dakota, you know we've got at least one, if not two more probably pretty good storms yet to come. We usually get one more before Mother Nature or Old Man Winter moves his way out and Mother Nature kind of brings in the springtime. So I'm just enjoying it while I can. And we'll see if we don't get another hammering of snow here over the next 2-3 weeks. Usually how that works. In the markets, though, Japan taking an absolute hammering, if you will, as they saw a huge move down, 6% in their market one day. That is a ginormous move for the markets to take. Now, globally, nothing really followed it. We had just a couple of just over 1% moves elsewhere in the world. But here we really didn't go anywhere. I mean, by the end of the day, we were only down 51 points in the Dow. So, it started to look like maybe this would be a major mover for the bears. Turned into nothing more than just a regular day in the markets, as it were. So the Nikkei, of course, getting hammered with the problems they're having, but our market's going nowhere. As you can see, we fell right down into this lower support at 11,900 and bounced right off of it, coming right back up to test overhead resistance. So these levels, these lines we have drawn in, working perfectly right now as support and resistance. Here we break it, here we hold it, here we hold it. So these lines working beautifully right now, not changing anything in the overall scheme of things. You can see this hammerish type candle being put in as the Dow tries to hold the lines it kept last week. Now, granted, we are back below the 50-day moving average, but this lower line of support I have drawn in here is holding very, very nicely, and that is right at or around that 11,980, 11,990-ish mark within the markets themselves. So you can see a hammer being put in here, which, bigger picture still neutral. We're still caught within this bigger range, 12.3, and this 11, it's about 12,000. But 11,990, 11,980 is actually a little bit more precise considering where it's at right now. So tomorrow, yeah, I mean, if we didn't go anywhere today, hard to know where we'll go tomorrow. Coming into options expiration week, usually expect some volatility. And so tomorrow's push above or back above the 50 could take us back up into this area yet again. The bulls may be able to drag this thing back up again since there wasn't a huge move by the bears overall. So we are basing right here on the NASDAQ now between the 2300 and about the 2270-ish mark. You can see us kind of flailing around with this lower support right here, which is going to have to change now with some of the newer information that we have. Bigger picture though, daily, you can see us just sitting right on this line. It's kind of pretty from the standpoint of it staying right on. Touches it, gets back above it, below it, but back above it by the end of the day. So it's loving. There's some buying going on down here. And any further push, then I'd be looking for this 50-day to hold. Below us, though, below that 2270 area is what you want to be watching then on the NASDAQ for any potential moves to the downside. But these three candles don't give us any real indication one way or the other. We are back in another trading range waiting for the break one way or the other. Here we are very close to the 20-week moving average. So further pushes to the downside NASDAQ, there's your target. That's what you want to be looking for, 2250 to 2260 by the time it's all said and done. SPX 60-minute as well, pushing right back up and into this 20-period moving average here, holding very nicely on the way back down. Breaks below 1295, giving us a little bit of opportunity to trade to the downside, but you had to cover because at the end of the day, buy the dips. Here come the bulls, and they kept it above 1290. So this 1290, 1295 area still of great interest for the bulls in what they want to do and how they want to hold. Giving us 1, 2, 3 days of closes below the 50. Well, I shouldn't say that. I should say 2 days of closes below the 50, with this one getting back above it on Friday. And once again, I've got to give a little bit of time to the bulls to see if they can't get it back above this 1302 now mark that we have sitting right here in front of us within the charts themselves. They are loving these moving average right now. There's huge fights at the moving averages as to who's going to retain control. It's the bears, then the bulls, then the bears, day after day after day. After the move today, though, we did see a little bit of a. If we move down further, I do expect us to hit the 1275-ish area to 1280-ish, potentially lower than that, but I would definitely think this 1275, 1280 area is definitely hittable tomorrow if we head to the downside again, see a little bit more bearishness come into the markets. But if it'll hold up above about 1290 or so, don't be surprised if the bulls don't decide to wander it sideways for a day or even start to move it back up, and your mark is once again back above the 50-day. VIX daily stayed up. It was up for the day. Markets were down, so confirming what we saw. But you can see, more importantly, staying at or around this 21 area. I wanted to see it stay above 19 to 20, and I'm obviously getting that. So right now, we're just pounding our way through this 50-week moving average on the VIX itself. And more importantly, as long as we stay up above the 1920-ish mark, there is still a good opportunity for the bears to drag this thing downwards. Just hasn't been violent. Has been good at times, but not necessarily really, really violent. But as long as this stays above 19 or 20, I like the move by the bears and what we've seen so far. Apple broke out of its little move, come back, kind of retest, hold, and then wander sideways for a while. So I don't know. It really wasn't a lot of trading to be done in Apple. I tried to find entries, and there really wasn't anything that gave me a definite there you go type of a moment. So I didn't do much with Apple today. Watched the markets for a little while in the morning before finally deciding to just sun myself on the deck, which is ultimately where I ended up. Now we are still holding not only the 50, but now yet again the 20. Apple's doing a very good job up here. So we're still looking for continued pushes above 354, 355. We got a little bit of it today, so there was a little bit of chance to maybe try to sneak in a little bit of trading, but it didn't take long to rip itself back downwards again. Very volatile today in Apple. There is buying and selling definitely in pretty equal amounts going on in through here. You can see it within the markets as you watch them during the course of the day. There's no real direction, and we will still be watching these overhead blue lines for the bigger areas to be breaking. However, as I've said, above that 354, 355, I'd give it another shot tomorrow if you were bullish on Apple, especially if the markets decide to make a rebound. That I think would be a very, very good stock to be watching to the long side if you're an Apple lover. FAS getting back below this little 2950-ish area. Not quite to the 29 though. Remember, I had my sights kind of on here, and look what we hit, 2901. So flipping to the daily, you can see us tag this lower area, stop and turn around, come back to kind of a break even by the time the day was done. Bears taking their turn at it, bulls having their way by the end of it. So once again, buy the dips. Bulls are not allowing this thing to go very far, very fast. A very, very, how would you say, controlled move to the downside so far over the past few weeks. And nothing's really changed on my levels. Still looking at it, get that out of the way, still looking at it below 29 and above 30 for your moves tomorrow. FAZ then, of course, wandering sideways. A little bit maybe of a push here, but I don't think, had I been trading this, I don't think I would have made money. I would have been stopped out on this trade for a little bit of a loss today because it just didn't clear this by any great amount. We never broke the 42.50 mark. We certainly aren't back below these levels. So once again, same deal on the daily. We did get above the 50. If you took a little bit of a long, speculative long above the 50, you're still right there. This is 41.36 and the 50 is at 41.30. So you are still in decent shape, so to say, coming into tomorrow. You're going to want to watch any moves back below about 41.20, though. I wouldn't be in that trade at that point. Let it really find its way out of this. Speculative trade is still above the 50, but let it find its way out of this and get above the levels we had talked about in yesterday's video. So I still like, 43 for a long, then below 38 for a short within FAZ. All right, guys, there you go. That'll do it for today's video. For those of you that didn't see yesterday's video, I'll give you a really quick rundown of what I took off of last week's charts for the subscribers. We traded CF last week. The trade was below 130. Getting back down into about the 125, 120 to 125 area was my target area to take profits. They got as low as 120, 121-ish or so, and today we're still just wandering sideways. But you can see that the break was beautiful right here. It was a very, very nice break of some support. We were able to catch that and make a little bit of money. I also had an alternative break of 127.50 for those that maybe missed the first one or a little bit more conservative break. So that was one we watched last week. The weekly basically was showing me where some of the resistance and support was going to be at. By the end of the week, we definitely held it, and so we took our profits. CVC wandered sideways for us and is still wandering sideways. This was a no trade. We didn't get a break down and through the areas I was looking for. We got gaps, and there was no trade after the gap, so this was really a no trade, but took it off the charts. Dries was one we watched, but we yet again did not get the breaks I was looking for. I really wanted something below 460 and then above 520. Maybe with oil making a move, we might see some movement in here. Didn't get either one. So Dries was another kind of a dead trade, so more or less for the week itself. Google was a short below 600. You can see we took that break right below this line here with a target of 590. Stops then at that point I recommended about 595-ish or back above 600. Some people got out at 595. Others held on for a while and were able to make some money by the end of it. Now we're down again today. I like the target of about 565, 570 range in the bigger picture. I had most of my guys out by the end of the week, and that was right around 570 to 580, so that was a $20 to $25 trade in 1 week on Google. Here was the weekly. This is what I've been looking for, is this lower support on Google, just so you guys know. This was my target, so we've kind of hit my more major target, and that was right here. Some of them I'm sure stayed in, and maybe, I don't know, they might still be in. Doesn't make a difference to me. The trade is over for me. Took it off the list. Just wanted to show you guys what we do in the subscribers video. For $1 a day, I give you picks on the weekend, not only for the major indices and the Russells and gold and oil and a lot of other stuff we talk about, but I also discuss individual stocks and give you picks like what you saw here. I give you entries, exits, stops, recommended plays, how to play it, what to look for, lines, lots more lines in my subscribers videos than what you see in the daily videos. I'm sure some people are like, why didn't he draw this particular line? Well, I probably did. It's just probably not in the daily video. So for $1 a day, give it a whirl, see what you think. A little ad is on your right. Click on it to sign up via PayPal, or write me or call me, and we can do a transaction over the phone if you don't want to go through PayPal. Take checks or just do a phone order if you want. So HON was one we watched as well. It didn't move for us, though. It was another dead trade. We didn't get a break one way or the other, so there was really nothing to watch. However, for your guys' information, if you are watching this Monday video, still not a bad trade to be watching. I still like it below the levels or above the levels I have marked on this chart. So if you want a freebie, there you go. This is a good one to continue to watch. All right, that'll do it for today's video. We'll be back with you again tomorrow night. Bye.